All right, it's late in the day, so I'll get right to it. All right, you've both been involved in the sports industry for many years, but you just recently decided to start dedicated sports funds. Why now, and what's changed?
Oh, you want me to start? Yeah. I think because before I was doing it personally, and I invested in a number of sports. After I sold the Bucks, I wanted to keep on investing, and I thought the best way to do it was through a sports fund. I wanted to be more diversified. I also think you're starting to see this huge growth. I think you're literally in the first inning. I mean, you wouldn't have had this conference 10 years ago. You now are starting to see that people are very interested in sports. It's a whole new generation. So I think we're literally at the beginning of a new wave.
Yeah, and I got started in sports 30 years ago, and I'd say for the lion's share of my career, nobody really cared on Wall Street. And frankly, it was meeting with guys like Marc 15, 20 years ago when he owned a piece with New Jersey Nets. Yeah. And all the smart money, individually, they were looking at professional sports, and you could see that there was a revolution coming in capital. And given my seat, having advised leagues and been around teams and having a lot of relationships, at some point it made sense for me to jump in as a principal. It's all about partnership, and I was thinking about it, but I wasn't gonna make a move. And I got approached by a guy named Jonathan Nelson, my co-founder, and he wanted to start something together, so off to the races.
Great. You're old. 30 years, a long time.
I was young then.
You look good, seriously.
Thank you, I'm trying.
So a lot of the funds that we've read about who are tackling the space have kind of limited themselves to LP sports stakes and teams. Neither of you are doing that. You want to talk about why that is?
Sure. I think that's how people get started. I would say that was sort of the first iteration. Second iteration was, all right, now we're going to take minority stakes. I think today, you want to be able to do everything that you can. You want to invest, like we invested in COSM. Has anybody here been to COSM? Right. Isn't it the best thing you've ever seen? Thank God you said yes. I always worry. I always ask that question. We go, no. But like, there is a company that's changing how people are watching sports, right? Us investing in bull riding, us investing in SailGP, just doing different things. We invested in the Orioles. There's different investments out there that I don't think people understand, and they don't get it yet, and they will. And if you're in the beginning, you're gonna make a fortune of money in this space. I think where you could have made money before was buying minority stakes. And I think you still can, but the spread is no longer what it was. You used to buy a minority stake at 40, 50% off. You're not doing that anymore. So where are you gonna make money? It's gonna be in sort of different leagues. Like there's a new league that got started. I got in trouble for mentioning it before. But like the slapping league, has anybody seen that? Right. Like think about it. Somebody says to you, here's a great idea. Stand right there and I'm gonna slap you. I would have said to you, whoa, I don't know, but it's taken America by storm. People love it. So what you wanna do is you wanna try new things, and that's where you're gonna make money.
I think firms are a reflection of their founders. And Marc, you've controlled a team, right? And that's what you've had a lot of success doing. So you with Avenue are going out and buying teams, which makes a ton of sense. If I think about my firm, myself, Jonathan, we've been around a lot of growth. Jonathan is a company builder, right? So the idea that we would go and buy a minority stake and just stare at it for 6 years doesn't make sense. The way I like to put it is I've got a partner who's a Ferrari sitting in a garage. Let's drive it. Let's build some stuff. And so while we will do some LP stakes, we did Liverpool. That's one where it's primary capital. We're helping them build some things. For the most part, we're looking at places where we can roll up our sleeves.
Great. So as Don mentioned, you own the Milwaukee Bucks. You won a championship. You successfully exited. What learnings from that investment as a private individual will help you running the sports fund?
I think you holding a trophy. So you want to actually win championships. That's actually a lot of fun. I think you learn quite a bit from owning a team. You actually understand sports because really what you're doing day in, day out is you're selling tickets, right? So there's 3 ways you make money in sports. First way is you're selling tickets, right? It's ticket pricing. Second is sponsorship. Third is media. And you've got to understand all of those things. And I think by owning the Bucks, I got to learn that. And when I'm looking at teams or looking at investments, it's how are you getting people to work together on it. So one of the things you quickly learn is you want a mic that works. Right? So that's one of the big things I learned, because when you're speaking to the fans and the mic goes out, you actually sound really stupid.
Good answer.
This one works. Ah, there we go. All right.
Yeah, just to sort of amplify a little bit, for those of us just watching the space, what Marc and team did in Milwaukee was pretty astonishing, because at the time, when you guys came in, really small market, bad gym, you're kind of looking at it and saying, why, right? But it wasn't just a matter of, well, the NBA is going to rise in ascension and the business model is going to get better. It's, let's think about, we got 20,000 people showing up 40 times a year. How do we make money around it? And I think that's created a business model that can be translated not just to other teams within the major leagues, but also women's sports, right? Minor league sports. People see, okay, if I've got a lot of people congregating in one place a lot of times a year, there's lots of ways to make money. And I think at the end of the day, for us as investors, it's about making money. And so we look at models like that, and while yes, it's great to be part of the NBA when they're going through that crazy rise, it's also good to have some nice cash flow businesses that complement it.
Think about it. When we bought that team, you're absolutely correct. Our practice facility was at a seminary, right? And we had to wait for the priest to finish playing before we could play. And you had buckets in the middle because it leaked. And I'm thinking, oh my God, this is where so part of the reason we bought the team is we were last in everything. The league tells you what you are. We were last in every single thing except for one thing. What do you think that was? Beer sales. That was it. We were 14th.
Buddy. So, Don, you were recently approved as one of the institutional investors that can invest in the NFL. Kudos. Most of the other firms were larger, more diversified firms. Why Dynasty, and why are you so excited about that opportunity?
Yeah, so as Lyle said, there's 4 groups that have been provisionally approved, and we're part of a consortium that includes Blackstone, Carlyle, CVC, and a firm called Ludus, led by Curtis Martin, former NFL Hall of Fame running back. When you look at all the folks around the table trying to partner with the NFL, there were only a few individuals who actually had NFL experience, and I think both myself and Jonathan, just having worked at the league, and Jonathan at Providence having partnered with the league, understood how the league worked. And I think the powers that be, both at the league, but also smartly in our group, wanted somebody who knew how to get a deal done, right? Lyle, you and I have gotten waivers for the Steelers, and got waivers for the Titans. Understanding how to actually move through that league process for the transaction was important, and that put us in a good position. I think also, just like anything in investing, it's about deal sourcing. And I think there was a view, hopefully it's correct, that I've got some unique relationships, as does Jonathan, and we can be helpful. I think, importantly, the group that we have formed, one of the issues around LP stake investing is liquidity. And I think one of the things that a lot of LPs in our world ask is, okay, so you've bought 5 or 10% of this team, how do you get your money back? And I think all the parties around the table in my group look at that problem and say, okay, we've got this fantastic set of assets. The NFL, nobody in this room needs to hear how great the NFL is, but we still have this issue of liquidity. We have put together a mousetrap that solves for that. And that was a very important piece of the puzzle. And it's what got the league excited to say, okay, let's bring together the Blackstones, the Carlyles, and the CVCs in the world, and then have a little speed ship called Dynasty that can help guide them through the intercoastal.
I'm assuming you don't want to elaborate on that mousetrap?
I think I'll put everybody to sleep. But suffice it to say, we have a way of getting our LPs liquidity without selling the team stakes. That's the important piece.
Great. Now, the NFL is one of the few leagues, and Mark, you can opine on this with the Bucks. It might surprise people, but the NFL, all the business is cash flow. I would say all the other leagues operate at or close to break even or lose money. As a part owner of the Houston Dynamo and Dash, I can tell you we definitely lose money. How do you, as a private equity investor, kind of wrap your heads around that and then ultimately underwrite returns?
Well, I think owning a piece of an NFL team is a great investment. Just is, because you have a cash flow, and it's one of the few leagues where, like you said, every team makes money. I think for us, you'll be surprised, when we bought the Bucks, it was making $5 million, and we paid $500 million. So that seems utterly reasonable, right? 100 times.
Well, it's making money at least.
Yeah, all right. When I sold, so how much do you think the team, I'm going to give you a trick question. All right, we sold for around $3.5 billion. How much do you think it was making? Go ahead. How much? Yeah, it's a good guess. It was losing $100 million. So if I said to you, have I got a deal? I'm going to give you the opportunity to lose $100 million. And all you got to do is give me $3.5 billion. I don't know that many people who would say yes. And part of that, the reason why the team's losing money is when you go over your salary cap, you have this luxury tax, right? And right now the team's still in that luxury tax. But it's exactly what you said, right? So I think for us, when we're looking at investing, we want to see where there's going to be growth, where there's going to be opportunity, and what else is there going to be, right? So I think we see that a lot in new leagues. I think what you've got in the NBA and in baseball and hockey, and the commissioner spoke about it earlier, you're going to have growth because ticket sales go up 5-10% a year. Sponsorships go up 5-10%. Media goes up, I would say same thing, 10-15 a year. You'll talk about the NBA deal. It was 2.5 times, but that's over 10 years. So for every math whiz here, that's like a 15% return annualized. So it's going to be slower growth, but that's okay, right? You're going to want part of that in your portfolio. I think what you've got in the NFL is you've got cash flow plus capital appreciation, right? That's what's unique about it. I think in most of the other leagues, it's not about capital. It's about capital appreciation, less about cash flow.
Yeah, just to jump in on that, I think when you look at the NFL, you've got this fantastic business model, right? And sometimes better to be lucky than good. I don't think they realized how important the revenue sharing would be. They've partnered with their players in a way that's unique. No work stoppages. They've got a very hard cap, which means they have a very profitable business model. What that also allows them to do is be aggressive. And you're seeing it now with international. For years, the NFL has tried the World Football League, and they dabble, a game here, a game there in Europe. They have now gone aggressively in an international expansion. Obviously they continue to play in London. They're playing in Munich. They played in Brazil this year. They're going to go to Madrid. They'll eventually get to Australia. There's grumblings around the Middle East. And they're bringing their real content. It's not preseason. It is the actual real games. And what they're finding is that even though for years everybody said, well, American football is not going to travel, the intensity of a football game, of an American football game, is something those that enjoy European football can actually appreciate. And those games matter, right? Every American football game really matters. And what you've seen, you saw it in Brazil. They sold out in 90 minutes. I just got back from Saudi Arabia. I was stunned how many people asked me about the NFL, if the NFL would ever come to the region. There's a lot of excitement. And the NFL can make the investment to grow overseas because they're all cash flowing, right? In the NBA and the other leagues, when the commissioner or league staff come to you as an owner and say, hey, we want to invest in this, there's some owners, not Marc, because he's smart and was an investor, but there's some owners who say, you know what, I got a capital call this year. I can't put that money out. Where at the NFL, they can all say, you know what, let's go spend that extra $20 million to maybe open up a new market. And that's what gets us super excited. And so we believe there will continue to be capital appreciation, but in a profitable way, which is very unique for sports.
Great. Now, this is a question, I guess, internal to the people who work for you, but also for the audience thinking about this. You have kids who have come out of private equity. and they're used to modeling an asset. And they do their DCF, they do their LBO, and they say, Mark, it loses $100 million. It's not worth $3.5 billion. It's worthless. And you say, we're going to buy that. Explain that process.
That's how it goes. Is that how it goes?
Explain that process.
I wish that's how it went. If I said, yeah, we're doing that. No, I think what you do in all of these is you sort of look. So here's an interesting statistic. If you look at the 4 major leagues, over 20 years, they've actually, I think it's like a 12%, 11.7% return, whereas the S&P is 7.7. So it's actually outperformed the S&P by close to 50%. I'm a big believer you're in the first inning. I really am. I think you're in first, second inning. And you want to be in sports. The hard part about sports is it's an asset, right? And I think that's what people have a hard time. They'll look, I want something that cash flows. I understand that, but I think for like your question when you said the team made $100 million, I think every team in every league could make you somewhere around $50 to $100 million. The problem, one of the reasons why we were losing money, and most teams lose money, is you try to win. Like the first thing you find out when you buy a team is it's not about making money, it's about winning. And you don't want to go to a game and lose. Like, who here is a Knicks fan? So I'm sorry. All right. So if you're a Knicks fan, do you care if Dolan makes more money or do you want him to spend the money for the Knicks to be good? Right? Think about it. All you care about is that you want the Knicks to be better. And here's why, what I would tell every young analyst. It's actually really interesting. Sports is the only thing where you have a customer base where no matter how poorly you do as a team, that customer keeps coming back. You don't have that. Like if Amazon gives you bad service or something gives you bad service, you'll stop going there. If the Knicks go 0 for 82, you're still a Knicks fan. You're upset. You're still a Knicks fan. If the Knicks win the NBA championship, you're thrilled. But you're still a fan. So it's one of the only things where it's hard to lose your customer base, and actually you get more customers every year. So that's why I think it's pretty unique.
Makes sense. Don?
Yeah, we won't do those deals, right? So if somebody puts in front of me like something that's just losing money forever, like it's cool, somebody else can do it. Like I don't need to do the deal. Like, and you may know that already, Lyle. So we are very focused on situations where there is profitability today or a real path to it. Like it's not some ethereal thing. I'm waiting for something to show up with augmented reality. Like I can see that there's something happening, and it can't just be we're going to win more games and increase attendance, right? Like that's not the answer, right? It's got to be something that I can touch and feel. The one thing I would say just about the P&Ls of sports teams, we are going through a bit of a revolution, right? Big tech coming in, and I'm sure that's been talked about a lot today. Big tech coming into sports is really changing things. I think there's 2 impacts to it. For the major leagues, it's meaning the teams can go from having a one-to-many relationship to a one-to-one relationship with the fan. And what does that mean? That means you can monetize that fan. Now, that's not exploitative. It's actually fans want to spend more money on things they want to spend money on, right? They want experiences. I've got a 5-year-old son. If the New York Knicks show up to me with something where I can take my son to do something fun on a Saturday, I'll pay all the money to do so, right? And the only way they can do that is that they know I have a 5-year-old son. The second thing, big tech, and that actually at some point has a real impact on the P&L, right? At some point you look up and you know, it may not be the next 5 years, but in 10 years, I think we'll see these teams looking a little different. I think the second thing, and this goes to a lot of the work that Marc's doing, what we've done with Tomorrow Sports, is it allows for sports that aren't just the big guys to find their audience, right? And I think that's something that, you know, when Marc and I were growing up, and Lyle too, we had 3 or 4 channels, right? So if you couldn't get on that channel, if you couldn't get on CBS or ABC or NBC, you were done. Now, if you're somebody that's a big fan of arena golf, you're gonna find arena golf, and we're gonna be pounding you with marketing in the next few months to get that going.
That's fair. So going further on that, outside of the major sports, because of, I would say, the egalitarian of streaming now, what other leagues do you think are poised for success?
You're the no. You're the.
I think it's,
I told you I'd give a softballer too.
yeah, no, I think a lot of it is what you find out about leagues today, which is amazing, is the following day you know how many people saw it. Like, you don't have to try to figure this shit out. The answer is there. Like, it's, I would say when we invested in Sale GP, I had no idea. How many people here Sale? All right.
There's more Knicks fans in the crowd.
Okay, so not that many,
He's a Brit.
right? All right, so you don't have that many people. Literally, I think 5 people raise their hands. All right, average NBA game. How many people watch it? 1.5 million, right? Here's another trick question. How many Americans? 350 million, seriously. These aren't hard questions. All right? So 350 million Americans, 1.5 million average NBA game. Sale GP is a league that got started 4 years ago. Do you know how many people watch that today? Close to 2 million Americans, more than watch the NBA game. I would have bet you any amount of money that wasn't going to happen. But I know the answer because I see the ratings. That's what we're doing, right? Our edge is we're seeing what we can invest in. That's why we're investing in all these things. Women's sports, fastest growing, right? When you and I were kids, my dad would take me to a game. He didn't bring my sister. Why? I don't know, he just never thought of it. Today, what parent is not bringing their daughter? Raise your hand. Yeah, I don't see any hands being raised. Okay, that means a lot of people are bringing their daughters to games. It is a cultural revolution that has occurred. That's why you're seeing all this interest in women's sports. It's happening, be part of it.
Yeah, spot on. I mean, I think for us, looking at women's sports, the big unlock is they actually can find a slot where people can watch. They're not just banging up against the primetime slot on CBS. I think we continue to want to be around sports where people are watching, and that's, to Marc's point, the data's there, right? And it doesn't have to be some guesswork. We can just look at the data, and it's there, and I think technology is a big part of that, and I think we're just scratching the surface. I mean, I think, we've had to go through a lot of turbulence, still going through it with Diamond Sports and all the RSNs, but we're eventually going to get to a place where the Amazons and the Googles of the world are going to be very helpful to the sports ecosystem. That's going to trickle all throughout. Like, I think it's not just the teams. I think there's going to be a lot of places throughout the ecosystem to make a lot of money, which is exciting for all of us.
Think of this. When you had Caitlin Clark play in the NCAA women's final, right? I'm going to give you a statistic because you're going to find it hard to believe. You had close to 19 million Americans who saw that, right? You've never had that many Americans watching a Stanley Cup playoff game? Never in the history of hockey. By the way, you've never had a baseball game, a World Series game where you had that many people. So what ended up happening is it caught everybody by surprise that you had literally a women's basketball team, women's on national TV where you had 19 million people. So you're seeing that, the NFL, 95, I think it's 95, right? 95 of the 100 highest rated games, 100 highest rated shows on TV were NFL games. So there's a lot going on, and I don't think people fully understand and know all the deals or the statistics. That's sort of how we're living and how we're investing.
Yeah. I mean, the stat I like to give, so at Liverpool, we've got 800 million of revenue. We believe we have 300 million fans worldwide. If you just do the dumb math on what that is per fan per month, it's about 20 cents per fan per month. That's nothing, right? Now, the problem is a lot of those fans we can't reach. But all of a sudden, out of technology, we're slowly starting to be able to reach those fans. So if you get that 20 cents to 50 cents, all of a sudden you're cooking.
So you guys have talked about the the tension because as a sports team owner, as an individual, you want to win. I guess you don't want to lose money either, but you want to win, right? As an institutional fund investing in sports teams, you want to win, but you want to deliver returns. So how do you define success in these investments, and how do you manage that tension?
I don't think it's hard. I think you want to make money. I mean, that's all an investor cares about. So, and that's all we care about. It's right? right?
Yeah, if there's an owner who just wants to spin, and head up against the aprons and do all this crazy stuff, I'm just gonna pass. I don't need to support that owner.
Fair enough.
Sorry, man.
I was hoping for
Nobody's
something a
forcing us
little
to
more
invest in it.
controversial than that, but you guys are still fundraising. I get it.
Yeah, how was Saudi Arabia? Was it good?
It's good.
Yeah, let me know who didn't. If anybody wants to have like a little guy.
These guys are all about investor returns. Any trends that we're following before they gong us off here?
Yeah, I continue to be fascinated by women's sports, and you know, I think there is a lot of turbulence to come around making sure the players make more money, right? And I think in the W in particular, just seeing how that plays out. People like Marc have invested in that league for a long period of time, and the players do deserve more money. At some point, that's going to cause something, and I don't know what it is, and maybe it's a work stoppage. Watching how that plays out, something that I'm very fascinated in.
I think the only thing I would add is just, ultimately, you have 350 million Americans. You don't know what people are watching or what they're interested in. That's really it. And I think that's what we're all trying to tap into. I mean, the fact that you have your team and you've got literally 800 million of revenue and you're trying to find these 300 million fans, it's not even that. You want to get it to 500 million fans, right? And as you're doing that, you're trying to, the technology is there. We're all going to see it. We're all going to take advantage of it. That's why I keep saying you literally are in the first inning. It is so different than when we were all watching TV.
All right, thank you both.
Thank you, man.